Hey everyone, welcome back to the channel. And today we're talking about real estate appraisals, exactly what the appraiser is looking for at the appraisal, and just some overall general info about the appraisal and how it fits into the home purchasing and the home selling process. And we're getting started right now. Hey everyone, welcome back to the Living in Maryland channel, where we discuss all things living here in the great state of Maryland. So if that's the kind of information that you're looking for, then you are definitely in the right spot, and we really appreciate you being here. And if you are considering purchasing a home, if you're wondering whether purchasing a home is the right decision for you and your family, we absolutely love helping out in any way possible with that, whether that's just having a conversation or going into a lot more detail about your specific situation and if that's the right move for you. So however you feel comfortable reaching out, whether that's by phone, text, or email, days, nights, and weekends, we've got your back when moving here to the great state of Maryland. All right, everyone, so we are discussing a real estate appraisal today, exactly what the appraisers are looking for and just kind of the overall process of an appraisal and how it fits into the role of buying and selling a home. So I would say outside of or behind the home inspections being probably the number one hurdle in a real estate transaction. The appraisal is going to be the second one. It is kind of a big part of the process of purchasing a home. It's going to be required for almost any buyer using financing. So it's going to be a part of almost every single transaction out there if you're looking to buy or sell a home. So it's something that I wanted to talk about. I've been getting some questions about it lately and just kind of wanted to go over some details and kind of give you guys an idea of what to expect from the appraisal process if you're looking to purchase or to sell a home. So first thing I wanted to clarify is going to be kind of comparing it to a home inspection and just kind of giving you a couple things to think about. I'm gonna, a couple points in regards to those two things. So first off is that a home inspection is really not necessarily pass-fail. So when I'm talking to a lot of people, that's something that a lot of people tend to think. So, but really the home inspection is more just for overall awareness to the buyer, as a buyer beware kind of thing, to give them awareness of exactly the condition and what's going on with that property and what they're walking into. And then also the ability to use that inspection kind of as a negotiating tool with the seller to either request repairs, certain repairs, structural, mechanical to the home typically. Cosmetic things are, they're kind of designed to be left out in regards to the contract. And then the other thing is that you can also use that to ask for a credit or even a combination of the two, either requesting repairs, asking the seller for a credit in lieu of certain repairs, or both. So that's kind of the idea of the home inspection. It's not necessarily, kind of a pass-fail kind of thing. Home inspectors really aren't even supposed to call out code just because it's not something that they're well versed in. So that's kind of an idea or just kind of some general thoughts behind a home inspection. Now the appraisal is a little more pass-fail in a sense because if it does not meet certain conditions, health and safety conditions laid out by the financing that the buyer is using, then the buyer can't get financing. So for example, if you're getting a conventional loan to purchase a home as a buyer, the appraiser is going to go in there and they're going to be, naturally coming up with a value of the property, but they're also going to be following the guidelines set forth by conventional financing in regards to conditions. So they're going to be looking for things like proper smoke detectors, CO2 detectors. They're going to make sure that all utilities are on and functional. They're going to be looking to make sure that there's no, mold and things like that. Very general stuff. It's not going to be nearly in depth as a home inspection, but they are going to be looking for things. They are going to do a visual inspection, when they go out to the property. So if they note anything that does not meet the financing guidelines for condition, that's going to be noted in the appraisal as a subject to item, things that have to be corrected prior to the appraisal being really finalized, and the bank's going to require that those things be done before they even lend money on that property. So in that sense, an appraisal is kind of pass-fail because the buyer can't get financing unless there's no items mentioned, so everything is passes in regards to condition, or if there are things that are brought up in regards to condition of the property, then those are going to have to be corrected and addressed by the seller in order for the buyer to move forward with the purchase. So just kind of a couple quick things, kind of differences between the home inspection and the appraisal. So the appraisal is going to have that aspect to where if certain things aren't done, then the buyer's going to kind of have their hands tied and they're not going to be able to move forward and get financing. Whereas with the home inspection, if something's brought up, there could be various, levels of concern depending on the buyer and depending on their experience with buying homes. So some buyers might be very concerned with, say a particular roof item, just as an example, whereas another buyer might not. So it just is going to be totally dependent. So the other thing I want to mention too is that, especially when people are looking at fixer-uppers, this is something that kind of comes up a lot. So if you're willing to take on a ton of repairs and kind of do things on your own, you may be willing to look over or look past those things when it comes to the home inspection. But if it cannot pass the appraisal aspect or the appraisal part of the process, then you're going to have your hands tied. You're going to be stuck as a buyer. So just something to keep in mind. So that's what I tell people when they're going through this process. Foreclosures, short sales, it's totally fine if you're looking for a fixer-upper, but you're going to want to kind of focus on things that are more just cosmetic, because as you get into bigger and bigger projects, bigger and bigger issues with homes, those are going to be things that are going to pop up on an appraisal as unsatisfactory when it comes to overall condition. And then the lender is going to require that those things be fixed. And if the seller is unwilling to fix those things, like if you're in an as-is kind of situation, which most distressed properties are, you're not going to really be able to get through that appraisal process, and it's going to be, kind of a big issue. So just something to keep in mind. Now, the other thing that I want to mention too is ask your lender if you're looking at kind of fixer-upper type properties. There are programs out there. I know that my lender has done one in the past where they basically have an escrow program. So as long as the issues that come up in the appraisal are not significant health and safety related issues, then you can escrow money at closing, and you can correct those issues as the buyer once you close on the home. You can correct those issues immediately, submit invoices to the lender that they're fixed, and then get your money released back from escrow. So that is kind of a little bit of a back door, but it's going to depend on the type of things that are noted in the appraisal that need to be corrected. So just a heads up on those items. All right, next wanted to mention that there's really two primary things that the appraiser is doing at the property and for the appraisal. So one, as I mentioned, they are going to physically visit the property and do more or less a visual inspection of the property to ensure that the property meets the condition guidelines set forth by the financing. So if you're using conventional Fannie Mae or Freddie Mac, depending on whoever the investor is, it's typically going to be one of those two. They're going to set forth certain guidelines for condition, and a lot of times they're very, very simple. So it's proper smoke detectors, CO2 detectors. They want to make sure that there's hand railings if there's 3 or more steps. So overall, pretty general stuff. If you're getting FHA financing and VA financing, there may be a few more things. So this is kind of why, if you talk to people during the COVID housing, kind of craze, if they were like, oh, I was going FHA or VA and it was difficult for me to compete with a conventional offer, the reason for that is because FHA and VA have a few more guidelines. They're a little more difficult and a little more strict when it comes to the appraisal process and when it comes to the condition part of that appraisal process, whereas conventional, they're just not as strict with that stuff. So it's a little easier to kind of get that property through. It's a little less headache for the seller. So nothing wrong with FHA or VA financing, but if you're in a competitive situation, that's why conventional offers look a little more attractive to sellers, because there's just a little less red tape when it comes to the overall appraisal process. So just something to keep in mind too. If you heard about that during kind of the super competitive times in the market, that's why that was. And then the second thing that they're going to do is they are going to give an opinion of value of the property based on similar homes that have sold in the area. So when you purchase a home and you get a copy of the appraisal, which every buyer has a right to get a copy of the appraisal, you're actually purchasing it as a buyer of the property. It's very in-depth, extremely detailed. It's a lot of times they're 30 to 45 pages long. They're just comparing these properties on multiple criteria. So that's kind of that's kind of the main function of the appraisal, because the lender is going to require that a satisfactory appraisal be submitted and that the property appraises for the contract sales price, or else the buyer and seller have to renegotiate the sales price, because the lender is only going to lend on the appraised value. So just something to keep in mind too. Those are going to be the primary functions. One is determining a value based on similar homes that have sold in the area, and two is going to be physically visiting the property to ensure that the property meets health and safety guidelines set forth by the financing that the buyer is using. All right, next I want to discuss waiving appraisals and kind of what that means. And again, kind of referring back to 2021, 2020, when the housing market was extremely competitive. Things have settled down a little bit since then, which is awesome. But when you heard of buyers, if you talked to anyone who said, oh, we have to waive our appraisal to compete or to get our offer accepted, they didn't necessarily mean that they didn't have an appraisal done on the property. If you're getting financing in almost all circumstances, an appraisal is going to be required for you to purchase that home. But what they meant was that they were stripping down or stripping away their appraisal contingency. So the bank is still going to require that you get an appraisal, but if that buyer waived the appraisal contingency, then they are agreeing to pay that contract sales price that's agreed upon in the beginning, no matter what the appraisal comes back at. So if a buyer agrees in the beginning, buyer and seller agree to $500,000 and the property appraises at $450,000, that buyer is going to have to put a down payment on the property based on $450,000, because the bank is only going to lend based on the appraised value. So if they're putting 10% down, they got to put a 10% down payment on $450,000, and then they'd have to come to the table with an additional $50,000 to satisfy that $500,000 purchase price. So when you have a standard contract and you have the appraisal contingency in place, if that same example occurred, then we start negotiating. The buyer's going to go to the seller, first, and we're going to say, Mr. Seller, Mrs. Seller, you have to come down to appraised value. If the seller refuses to do that, then anything, the buyer and seller can make up the difference by negotiating that in any way. Or if the buyer's unable to or unwilling to come up with any of the difference, then the buyer can walk away and get their full deposit back. So it's really important to have an appraisal contingency in there. But if you heard people talking about waiving the appraisal, they were really just waiving the appraisal contingency. So something to just kind of keep in mind that, hopefully we won't have to go back there anytime soon. But just wanted to clarify that as well, since that was so recent and we heard about that for so long. That's what that was. And then while on that topic, I wanted to mention, it is still possible as a buyer, if you are putting 20, 25 plus% down on a property, if you have, very strong credit, very little debt, so low debt to income ratios, it is very possible that you could get an appraisal waiver if you are going conventional, using conventional financing. FHA and VA don't do this to my knowledge, but so just a heads up too, if you're in that situation of putting a significant amount down and you have, really strong credit, you've got very little debt, it's very possible that the lender will say you don't have to do an appraisal. And then at that point, you'll have to talk, discuss whether you're comfortable about that or with that or not, because you still have the right to do an appraisal even if the bank doesn't require it. So, and just also be aware that that's not the individual bank, telling you that you don't have to do an appraisal. It's the automated underwriting system that all lenders across the country use. They input all the information, they put it into an automated underwriting system, and it spits out an approval and a whole bunch of criteria and details to that approval. And one of those things is going to be if an appraisal is required or if there's a waiver. So it's pretty rare, but if you're putting a significant amount down, if you've got really strong overall profile for a mortgage, then it is possible that you could get a waiver. And then you want to decide, okay, am I comfortable waiving that appraisal, saving the $600 because an appraisal is going to run $550 to $650, or do I still want that appraisal to, for my peace of mind to know exactly what it is, or maybe as a negotiating tool? Maybe you're concerned about it actually appraising at whatever your contract sales price is. So just a couple of things to think about that too. So if you're in that situation, something to think about so you can be prepared if that comes up for you. All right, and last but not least, wanted to go over real quick kind of the process of ordering an appraisal and just kind of how that works and who's involved. So first off, the lender is going to order the appraisal. Whoever you decide to go through for financing, that bank is going to order the appraisal. So let's say you're going through JP Morgan Chase for your mortgage. Chase is going to order the appraisal. However, the appraiser does not work for Chase or whatever the bank is that you're using. The bank is going to order the appraisal through what's called an AMC, an appraisal management company, which is just a large pool of local appraisers in whatever area that property is in. So this got changed, during '08, during the Great Financial Crisis. So when lenders were, at that time, they were hand selecting their appraisers, and that was a problem. So, the lender, I can just imagine like lenders and appraisers, getting a cup of coffee and discussing, the value that it needs to come in at. So that was naturally a problem that needed to go away. So that got fixed. Nowadays, if you're ordering an appraisal for your financing, the bank is going to order it through an appraisal management company, which is a third-party entity. Their job is to provide a large pool of appraisers. They get hand-selected out of basically a proverbial hat to go do the appraisal for your file. They submit the file or the appraisal to the AMC, and then the AMC submits it to the lender. So there's steps, there's processes to this now. And at the end of the day, this is the best thing for the consumer. It just, it keeps it a lot more honest to where there's kind of barriers in place to where, and for me, like I see this all the time. So as a buyer's agent, if I'm working with a buyer, we're not able to communicate with the lender, with the appraiser. If you talk to your loan officer, whoever you're working with, they'll tell you they can't communicate with the appraiser. So they've put things in place to make sure that the appraiser does their job and that they're not influenced by anyone involved in the transaction. So the only people that really have access to the appraiser is going to be the realtor representing the seller, and that's just to really get them access to the property, and then provide some information to justify the contract sales price, and the appraiser can take that into consideration, or they can decide that that's not relevant and they can just use whatever information that they decide is most relevant to deciding value for that property. So kind of interesting, they definitely made some changes, and overall I think it's very healthy for the market, but just an idea so of kind of exactly how that works and how that process is done these days. All right, everyone, thanks so much for watching. I hope you learned something new, and if you ever need anything at all, please feel free to reach out, and we'll see you at the next video.